Imagine earning money every time a Justin Bieber or a Bob Marley track is played. Sounds crazy, right? Well, that's exactly what some of the biggest private equity firms are doing right now. And it's turning your Spotify playlist into Wall Street's latest obsession. I worked in private equity in London for multiple years, and I've seen a lot of these deals happening. So let's go through it together. Why music catalogs have become a billion-dollar asset and why Wall Street is suddenly obsessed with your Spotify playlist. Let's see how big this industry has gotten. Hypnosis, a music investment company, raised $1.5 billion in 2024 from Blackstone, which is a private equity giant. Together, they bought rights to songs by artists like Shakira, Red Hot Chili Peppers, One Direction, and it doesn't even stop here. The same year, Apollo Global Management invested $1.8 billion in Concord Music. They've quietly built one of the largest catalogs in the world, snapping up everything from rock classics to Broadway soundtrack. We're talking the Beatles, the Rolling Stone, or Phil Collins. You also have this company called Brookfield. They're better known for real estate and infrastructure investment. They've also partnered with Primary Wave by investing $1.6 billion in music rights in 2022. They now have stakes in legends like Whitney Houston or Prince and Bob Marley.
Have you made a lot of money out of your music?
Money. I mean, how much is a lot of money to you?
In simple terms, all these investment firms are buying the rights to old songs so they can keep earning royalty from them. These are not just small-time investments. These are billion-dollar bets on the power of music to keep making money for decades. Now, you might be wondering, why would someone like Shakira or Bob Dylan ever sell their rights to their life's work? So let's start with the basic. An artist will create a catalog of songs, which is just a collection of songs that someone owns the right to. These rights mean that they earn money every time the songs is being played, used in a movie or streams on Spotify, or even performed live. Think of it like owning a flat that you rent out. You don't sell the flat, you just earn rent whenever someone uses it. And the same thing happens with music. Every time a song is used, the owner of that song earns a fee. Okay, so why would a superstar sell the rights to their music? There's kind of multiple reasons, but a few of them is that they get a big lump sum amount upfront. Instead of waiting years to collect royalty payments bit by bit, they get paid tens or even hundreds of millions in one go. It's like kind of winning the lottery on your own work today. Kind of second reason is that the future is uncertain. With streaming models changing, new copyrights law emerging, or even AI-generated music, some artists would rather cash out now whilst their song is still kind of highly valued. And you can also think about how this could help the artist planning their estate or their taxes. For older artists, selling their catalog now can help them manage their estate and lock in favored tax treatments. It's kind of a way to simplify things for their family as well. So for many, it's a smart business move. Get paid now and reduce the risk later. Now, why are private equity firms suddenly obsessed with music catalogs? Is that like a new thing? Well, for a few reasons that kind of make sense. First, they see it as an annuity. Imagine getting paid every time a song is played on Spotify, used in a film, or performed at a concert. Those payments keep coming in year after year. It's predictable and it's stable income, exactly what investors love. The second reason is that the cash flows are not tied to the stock market. That means that even if the market crash or interest rate bounce around, people will still listen to Beyonce or the Beatles or Taylor Swift. So music royalties keep paying out, even when older investment gets shaky. Look at Madonna during the 2008 financial crisis. Her world tour made $280 million revenue. Proof that the beat goes on no matter the market. And finally, it helps them diversify their portfolio. Music catalogs behave very differently from traditional investment like stock or real estate, which makes them a smart way to balance risk. So in short, steady income, less market drama, great diversification. It's literally turning hit song into fixed income asset. So how do these music catalog deals actually work? Step one, the valuation. So buyers look at the catalog's recent earnings, usually based on something called net publisher share or just trailing royalties. It's basically how much cash is this catalog bringing in each year. Think of it like you'd value a rental property. based on how much rent it brings in. Then comes the price. Investors typically pay a multiple of annual earnings, often 10 to 20 times what the catalogue makes in a year. So if a set of songs earn £5 million a year, the deal could be worth 50 or 100 million pounds. And finally, how do they pay for it? These deals are usually financed with a mix of debt and equity, just like a company's buyout. This means some money is borrowed with debt, and some comes from the investors themselves, the equity. So in the end, it's the classic private equity playbook, just with famous pop stars instead of more boring companies. So next time you hear a Beatles track in the shampoo ad, remember, it's not just music, it's an investment. Would you ever invest in your favorite artist's music if you could? Drop your thoughts in the comments and subscribe if you want more stories where pop culture meets finance.